Hey everyone, welcome to the PivotBoss Closing Report for March 21st, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What we talked about before was how prices have continued to push beyond 2,000 here, and that was the important key pivot. When prices were pulling back, we talked about how bulls wanted to defend the weekly pivot range week over week, which has continued to be the case. And we've seen some of that come into effect already this week. So basically prices pushed back into the top of the weekly pivot range right here, and off that level we saw price push higher the rest of the session, and that's where we're holding right now. So that's going to be the key level right now, is 2030s. So very short term, if price fails to hold above 2030, we could be looking at a move back into 2019 with a shot at retesting the key 2000 key level. So it's going to be important to see how far we pull back, if at all. But overall, I've mentioned before, I believe that we're continuing higher into this HVN. I think we saw rejection down here at these lows. That led to a snapback rejection back toward 1941. From there, I mentioned if prices can hold beyond that zone, we could see a continuation toward the opposite end of the range and that HVN. And so far, we're almost there. So I believe that overall, we're going to continue seeing further strength toward the HVN above at 2061. Now, if we drop into the intraday time frame here, you'll notice that price formed a very nice overnight impulse range. We talked about it in the pre-market report, 44.5 down to 31.25. The midpoint of that range is 37.75. You can see how price chopped back and forth of that range. Came into and took out those the overnight high by a tick or so, and then came back and held. So if you take this thing back out a little bit, you'll actually notice that prices are coiling significantly on these highs. Very clear two-day highs here. Above 2044s, 2045s, opens up a continuation into 2055 with a shot at seeing a full-on move into 2066. So we could see a very solid push higher. Now, I'd be watching 2045s very closely, because any failed expansion or failed acceptance beyond 2045 will easily lead to a move back toward 2030 and perhaps lower. All right, let's take a look at crude oil right now. You can see that 42.50 is still a very important key level here. Prices rolled off of that level in Friday's market, and again continued in pre-market and overnight trading heading into Monday's session. Price continues to hold above 40.08, which is composite VPOC right now. Taking that level bid implies further strength. Given the current Monday low here, the primary target for the week is 43.59. So right now we're about two handles off of that level, and any pullback into perhaps 41.90 could offer an opportunity to squeeze this thing into 43.59 and perhaps into the next HVN above, which is 45.65. Any failure to hold above 40.08, taking that offered, would be significant and would likely auction price all the way back down to the bottom of composite value, which is 34.01, and that last HVN below. So right now we're kind of watching this, basically this double distribution range here. We have 40.08 here, we have the 34.25 there. If this price can't stay bid and instead goes offered, the implication is if this HVNB is rejected, then you're likely going to see a beeline for a move into 43.25. So it could be significant ahead. Now, if we take a look at the intraday time frame for crude oil, you'll see that price is coiling up here at these highs. We have a very tightly coiled range, especially how the price finished the session here, where price is basically doing this pattern. That tells you right there that this is a big time area of resistance here, 41.80. And basically, if you draw 41.80 here, you can see prices held up here, kind of a double top off the 42.50 key level, and then prices drop below there and never to return back above it. That's the previous session's midpoint. So if you bring up the daily pivot range here, you can see that's the top of the pivot range. So this is a rejection. What you see right here is this is the pivot range from the prior session. This is the current session's pivot range down to about right here. That's an overlapping higher value, and yet price closed below it and then opened below that level and dropped before rallying into it. So very clear rejection of this zone up here, 41.80, very important. I would think that bears want to continue to defend that area for a shot at new lows. Above 41.80 challenges recent resistance at 42.50. All right, taking a look at gold here. You can see gold has had some significant struggles here recently, seeing any acceptance above the 1272s. Lots of rejection at those levels. You see the recent bounce into that zone was also defended, and that implied a return back toward 1233. We're almost there now. I would say right here we're forming a clear range from 1227.70 up to about 1282, and that's the new range right here we're watching, which is basically in the upper distribution of this key range here. Eventually, expansion from this range will be important because failure to hold above this zone runs the downside sell stops, and you'll likely see a push into 1191.5 and perhaps into the LVN at 1180. Any such move is likely to be defended by bulls for another return back higher. If bulls are able to defend 1227s, expect a rotation back toward 1272s where bears continue to defend. All right, taking a look now at the NQ. Here we are. The NQ has been trending higher. We obviously see a very clear pivot range along the way as well. And that higher value relationship has been defended time and time again. The pullback here has been defended. And now we pushed through the recent 3-day highs and really closed outside that range. In the trading room, we talked about how narrow this 4-day range was and how that narrow range could spark the next major unidirectional breakout trending move. So above the top of this range, called 415 to 420, opens up a move into the next upside key targets. I would say this next one up at 45.23 is a significant target, as is a push into 47.47. Now, any failure to hold above 43.55, so for example, if this thing flushes across the range here and pushes through this 43.55, all these market participants will get their stops run. You'll likely see a push back toward 42.18s and perhaps lower. So this is a very clear range here to watch. As a matter of fact, if we drop into the lower time frames, there we are. You can see how the key range that we had built out the previous week right here from 44.12 and 43.59, which was basically the morning after the Fed day. That gave us these clear boundaries to watch. Price basically traded within that range and then tried to hold above it late in the session. So a nice late day attempt. Overall, 44.06, failure to hold that level, auctions price back to 43.75. Any bounce into that, any zone, drop into that zone is likely a bounce opportunity back up. So we're going to keep an eye on this area to see how price responds. Failure to hold above 44.05, 44.06 could spell an early push lower. All right, that's it for now. Let's see how this thing plays out heading into Tuesday's trading. Good luck and trade well.